Hello everyone, welcome back to my channel. I'm your host Miss KK and this is The Wave. It is your weekly show that looks at topics related to personal, family and business finance, and our hope is that by the time we get to the end of this series, you are really better equipped to make sound financial decisions. If you are new here, thank you so much for stopping by. We really appreciate. And if you're already a returning subscriber, an awesome appreciation. Today's video is a follow-up on last week's video where I was debriefing some Q&A I did on my Instagram page, and it's another tax video. This is the fourth video I'll be doing on the subject, so if you haven't done so, please do check out the PAYE 5 video that I did. Please do check out the tax certificate video I did and the debrief video I did last week. The one thing that I realized about all the other videos I've done on tax so far is that I've assumed that you already have some basic understanding on tax, which is not necessarily the case because we all work in different industry and some of us may have not been exposed to tax before. So today's video is that informational video to bridge the gap between where I thought you are and where you are actually at, so that you can actually start better participating in this conversation. So I'm going to be discussing this in context of a salaried employee, assuming you actually go to work and you get a payslip on a monthly basis, and sometimes you see a line item called PAYE, which is PAYE, which is we sometimes shortened as PAYE on your payslips, and you're wondering why it's there or how it's actually affecting your life. So that's the first thing, assuming you're a salaried employee. If you are an entrepreneur and you pay provisional tax, unfortunately that conversation is outside the scope of this video. So the second thing that I want to discuss is, now I'm going to stop saying first, second, because I'm going to lose my train of thought. The other thing that I want to discuss is the tax year. So your tax year doesn't run the same year as the calendar year. A calendar year starts in January and ends in December, whereas a tax year starts in March each year and ends at the end of February each year. So which means that for 2022, the tax year has already ended on the 28th of February 2022. But you have up until 30 June 2022 to actually file your return, so you shouldn't panic, you still have time. So the reason why the receiver of revenue, or NAMRA, which is the tax collecting agent in Namibia, actually give extension for individuals to submit up until 30 June is because we need to get what is called a PAYE 5 from our employers. Our employer needs to close off their books. They need to make sure that the records are up to date before they can start giving us those PAYE 5. So that's the one thing that I want to understand. It's the tax year and when your return is due. So if you haven't started doing your return for 2022 yet, you must start gathering your information, because you now have May and the end of June to actually file your return. I personally haven't started yet, but I'm busy sorting out a tax issue from the last 2 years that I'm trying to close out before I actually file my return for this year. The admin around actually filing your return is you need to do it on ITIS. So previously you used to get a manual tax form in your mailbox, where the receiver would post, or NAMRA would post a form to you, and you can actually fill it in, and it will already have your name, your tax number, etc. But nowadays that is no longer the case. You are actually supposed to be filing your return electronically. So what you're supposed to be doing is you're supposed to be registering on ITIS, creating a profile which involves a username and a password, and then you're supposed to be filing your return online, uploading any supporting documents on that system, and that system will automatically then assess you and actually throw out whether you have a refund or you have a tax due that you need to settle. So that is the first thing. So if you haven't been registered on ITIS, please do make time and register on ITIS. You can actually do it at their offices. People are there. They can help you, or you can find a small accounting firm that actually does ITIS registration and submission for individuals. Then you can do your tax that way. So now we've covered the tax year, we've covered the admin around when to submit and how to submit. So the one thing that I actually wanted to discuss is around what actually goes in a tax return. So basically, if you are a salaried employee, your employer is supposed to withhold a monthly tax over from your salary and pay that over to the receiver of revenue. So I also like relating things to the current news. So I don't know if you've been following the news with the activism that has been going around with Michael Amsherilo, where he went to a company and actually found that the employer was withholding tax from employees' salaries, but wasn't actually paying it over to the receiver of revenue, which is actually illegal. So if your employer is withholding tax from your payslip, they must be paying it over to the receiver of revenue, so that come at the end of the tax year, which is now February each year, or when you are filing your return between February and June, you are not in a position, you are not put in a position where you have to pay a lot of money to the receiver of revenue because you haven't been paying tax throughout the year. So basically, by virtue of the fact that the receiver, your employer is withholding tax from your payslip on a monthly basis and paying it over to the receiver of revenue, it helps you with managing your cash flow such that at the end of the year, if you are just a fully salaried employee and your employer, you don't have any other deduction or any other income outside your employment, you wouldn't have any liability to the receiver of revenue, or you wouldn't owe anything to NAMRA, and NAMRA wouldn't owe you. So basically, that's how it works. So your employer would withhold PAYE from your payslip and pay it over. So at the end of the year, they'll give you now what is called a PAYE 5, which is basically a certificate to say this is how much we've withheld from your salary and this is how much we've paid over to the receiver of revenue. Then you take that information and you contextualize it in the bigger scheme of things. So basically, there are two things that normally happens in your day-to-day life. So you may have income and deduction that are strictly linked to your employment. So that information is the information that your employer would be aware of, and when they calculate your tax liability at the end of each month, they would know how much you earn and how much they can deduct and ultimately pay that over to the receiver of revenue. But you may have things that are in your personal life that the receiver wouldn't know, that becomes your responsibility when you are doing your annual return to actually make sure that you are bringing these things as per the Tax Act in order for you to be paying over your tax affairs correctly. So take a typical example. Most of us have side hustle and we generate additional income. Most of us rent out our apartments or our houses and we generate rental income. Most of us have additional pension retirement product that we are contributing, that our employer isn't part of that arrangement, that we actually need to be deducting from our salary or our taxable income when we're actually doing our final tax return. Or you may have study policies, or you may have other deductions that are eligible for tax that your employer doesn't know. So this is where now your knowledge of tax come in, or your knowledge of your consultant's tax come in, to make sure that your tax affairs are declared correctly and you are paying over the right tax to the receiver of revenue. So your responsibility is to take your PAYE as you get it from your employer and actually assess what other income you should be declaring in your income tax return, declare those, what other deduction you should be taking out from your taxable income, and ultimately decide whether there is a tax liability or there is a tax refund that the receiver needs to refund you. So assuming you've collected that information, you've actually gone and filed your return on ITIS, there are two outcomes that can eventually come out from that exercise. Number one, you could have underpaid less tax. Maybe you had more income in your personal capacity that your employer didn't know about, that you eventually put it in, and as a result you have to top up, or you have to make a top-up payment to the receiver of revenue or to NAMRA. So that means at the end of the day, when you do your annual return, you must pay and actually attach proof of payment that you've actually paid that. Or you may be in a situation where you don't have additional income in your personal capacity, but you have additional items that qualifies as deduction. So in my case, for example, an additional pension fund that you have, or an additional study policy that you have, when you put it in, it creates a refund position. So when you are in a refundable position, the receiver doesn't refund your money directly. So they first wait to come and do an audit and make sure that you are actually claiming a right deduction. And once they are satisfied that you are claiming the right deduction, they will then pay you. So I don't know if you also have been following the news. There's been a bit of a situation at NAMRA where they've said that there's a fraud thing going on there, and they're not refunding any, a refund to individual taxpayers, at least until June, when they are done with their investigation. So if you do have a refund, you will need to undergo an audit before you can get your money from the receiver of revenue. So that is basically the overall understanding of income tax. So you've understood what your year end is, you've understood what your PAYE is and how your employer withholds PAYE from your payslip. You've understood how to bring in your additional income, mainly rental or side hustle, from your personal life that your employer doesn't know about, and you've also understood how to bring in additional deductions such as pension funds and such as study policies from your personal contribution. The other things that you also need to be aware are income tax tables. So basically, I actually just used this book called Concise Guide to Tax in Namibia, but it will also require you to have some basic understanding of tax in order to be able to comprehend the knowledge in it. I don't know where to buy it. We generally just get them from work because we use them as part of our day-to-day activities. But so this book would have a tax table, or if you Google tax rates in Namibia, it will give you a tax tables of individuals, and individuals are actually taxed according to the sliding scale. So the more you earn, the more money you paid over to the receiver of revenue. So the one thing to note is anything below 50,000 per year, you won't pay any tax. And anything above 50,000 per year, you are going to be paying tax according to the various tax table. It will be a good thing to also know in which tax bracket you actually fall in. And as you get more wealthier and you get more knowledgeable, you actually start having an understanding and an appreciation of some of the tax structuring that you can do to make sure that you are paying the least amount of taxes possible. But do remember, there's also what is called tax avoidance, where you deliberately trying to pay less tax, and that can get you in trouble. So basically, that is the one thing I wanted to cover about tax table. The other thing I wanted to cover is also limits of deductions that are allowed. So as with any act, there are with thresholds and limits that you need to be following with in order for you to be able to either get tax or to get a deduction. So like I've mentioned, for you to get tax, you need to be earning at least 50,000 per annum. And for other deductions, there are limits to say you can only deduct up to this much per year. A typical example is a pension fund that you can only deduct up to 40,000 per year in your tax return as a pension fund deduction. So if your pension fund is you're contributing 50,000 per year in pension fund contribution, that means the other 10,000 that you contribute extra won't be deducted, which means you're actually essentially going to be paying tax on that amount. So those are some of the tax thresholds that you also need to be aware of. But the good thing with the receiver of revenue's new system is as soon as you put in an amount, there are limits and checks on the system such that it won't allow you to claim more than 40,000. So that's a one good thing. Even if you don't know the limit, the system will limit you to the threshold that it actually needs you to claim. The last thing that I want to discuss around tax is around disbursements and subsistence allowance, or S&T as we call it, and the tax implication thereof. So the one thing that I'm actually struggling with, or that made me struggle with my tax affairs, is actually subsistence allowance. So when your employer generally pays you, they don't withhold tax from that amount because it's supposed to be reimbursing you of what you spent for being away. But sometimes we do know that your employer may reimburse you, for example, 200 a day, but you only pay incur 150. So they've actually given you $50 extra that you didn't spend, and it's only rightfully so that you must be paying tax on the $50 that you haven't been able to spend. But because the employer is not able to track on how much you spend, etc., they generally just assume you spend everything that they've given you, and it's your responsibility to prove to the receiver that you've actually also spent everything that they've given you. So generally what would happen is then the employer wouldn't withhold tax on S&T, and they will pay you the full amount. And when you do your annual tax return on ITIS and you put in the subsistence allowance that was received, there will be a column for you to actually fill in the actual expenses that you've incurred. So for you to actually now claim the actual expenses, you need to prove it with receipts. You need to actually have a summary of all the things you spend. You have to have physical receipt to prove to the receiver that you've actually spent this much money. And at the end of the day, you can be in a refundable position or a payable position, depending on whether you spend too little or too low. But then again, it also involves an audit. So this is what I'm actually going to do tomorrow. So I've gotten to a situation where they've disallowed my disbursement because I didn't attach proof of receipt, and basically it was because my file was in Windhoek and I was working in Walvis Bay. So normally with the receiver of revenue, the office where you are registered at is where you solve all your tax issues if you have any tax issues. So I couldn't resolve my issues in Walvis Bay because I never transferred my tax file from Windhoek to Walvis Bay because I started working in Windhoek. So I have an appointment there to go and take all my receipt that I've spent on all the trips that I've gone to. Then they will look at, yes, Christina did spend XYZ, therefore she can deduct this from her tax calculation, therefore she doesn't have to pay tax on this amount, and any penalties that was levied on your account can then be waived. Or if they decide actually the expenses are not eligible for deduction, then you're actually supposed to then pay what is due. So that is basically the nutshell that I wanted to cover. I wanted you to know the tax year. I wanted you to know the PAYE and how it works with your employer withholding tax. I wanted you to know what you can have in your personal space that can affect your tax return. I wanted you to know the tax tables that are actually applicable to you. I wanted you to know the threshold, especially around pension fund. That is the one noticeable thing that everyone sort of seems to have. Then I also wanted you to know how your subsistence allowance and how critical it is to keep your receipt. Sometimes you're also reimbursed for mileage and having driven out for work purposes. In that case, you are expected to keep a logbook where you actually record that when my car had this much kilometers versus when my car had this much kilometers. This is when the company sent me to the north for an audit, for example, and the rest of the kilometers was when I drove between home and work, because that is not considered business travel. So you need to have all of those things in order for you to prove to the receiver that that money that you're given either for S&T or for vehicle allowance was actually used for the right purpose. That's the other element that I wanted to discuss. And lastly, I just want to highlight that there are penalties and there are consequences of not doing your returns on time or underpaying your tax liability. The penalties are also stipulated in the Act. The one noticeable one is your return. You are charged $100 for every day that your return is due. Do the math. If your return is outstanding for 3 days, you already owe the receiver $300. On top of that, if you have an amount that's outstanding, so for example, on my tax account, because they disallowed my S&T deduction, they actually said, no, you cannot claim this, you are going to be paying tax. And because I haven't paid that amount, they start accumulating interest on that amount, and that interest is calculated for every month that has been outstanding. But if you get to a point where you reach consensus with the receiver and they say, actually, you are eligible for a deduction, they would waive those penalties. Or if you're lucky, you could have partaken in the tax incentive scheme that just ended, where they were writing off penalties and a portion of interest if you pay whatever is due to them. So really, this is all I wanted to discuss about tax, and I just wanted to bring the conversation, to a 101 level so that we all understand where we are beginning. Now that you also understand this, take a step back and now think to yourself, request your PAYE 5 from your employer. If your employer haven't done so, generally they will send out email or they'll send out notices to say the PAYE 5s are ready for collection. If you have any pension fund outside work, request your tax certificate. Generally, if you have signed up via email for any investments that you have, they will send it to you via email. I've just received mine recently because they all know that everyone needs to start filing their return by June. So they also need to give to you in time so that you can actually file your return and avoid last minute system crashes, etc. If you have any study policy, request that. If you have any income that you are generating in your personal space, collect that. The one thing that I also want to point out here is if you have a house that you're renting out and that income is actually subject to tax, it also just means the related expenses around that house can be deducted. So if you are paying rates and taxes, if you are paying insurance, if you are paying someone to clean the house, if it's for example, if you are renting it out and you are paying someone to clean the house, if you are paying Wi-Fi for the tenants that are in that house that is part of their rental agreement, those expenses are actually incurred in the production of you earning that rental income and can be deducted. Unlike if you live in your own house, the water you use, the electricity you use, the food you eat, that is not deductible because you are not generating money from that house. But the moment you start generating money from the house and the income is subject to tax, the related costs that are related to the generation of that income, you can actually deduct it. So yes, I can go on and on and on about tax, but this is really all I wanted to do. So if you do have a specific request about a tax query that you have, please let me know. It is tax season. I just want to make sure that you guys are aware about the basic tax rules so that you are actually becoming a law-abiding citizen by filing your tax return on time. Thank you so much for tuning in. I really, really appreciate it. And until next time, it is goodbye.